Good morning, everyone. Welcome to the Stock Market Morning Prep video for Monday, May 18th. Hope everybody enjoyed their weekend. On Friday, we did absolutely nothing. Take a look at the 5-minute chart of the SPY. We ended up flat on the day. Is that a good thing or a bad thing? Coming off of Thursday's price action and advance, I do think that it is positive that at least it held Thursday's gains. We are down a little bit in the pre-market. Not much of anything really to write home about, but we're going to need to test this Thursday's high and or low. I think that's going to be the most important factor coming into this week. So if we start to take out Thursday's high in the markets, in which I'll go over in the charts, then I would start looking for some new order flow, some new money coming in, some fresh money coming into the market. Or if we start to really break down on take out Thursday's low, and this is all on a closing basis, then I would look for some more some more downside. Excuse me. So let's take a look. Let's go right into the charts here. Looking at the XLF, as you know, I've been following the banks here. We did break above this little consolidation of the resistance. We are above it now. And look what we have up here. We have this thin zone. Remember, if the banks and financials can rally, that's going to help, obviously, equities, U.S. equities here. So let's keep an eye on the banks and financials. They do look pretty good. I wouldn't buy them here, but I think I'd buy them a little bit on a pullback. And again, look at the big banks, guys. Wells Fargo, Bank of America, J.P. Morgan, Goldman Sachs, one of the financials, Morgan Stanley, another financial. You can look at Citi. There's a couple of good regionals that are out there showing some sign of strength as well. So something like that I'd keep an eye on, any type of pullback. I'd love to see a pullback in the market here so we can really set up for some new longs. Unfortunately, we are a little bit stretched, and we have been stretched for quite some time. But we find we see no signs of actually pulling back here. There are intermarket divergence between the transportation sector, the IWM, which is our secondary leader, showing signs of deterioration and possibly setting up for another lower high. We'll go into that as well. Let's take a look at the spiders. As you can see here, inside, well, not really an inside day. We did close ever so slightly above Thursday's high, but really want to take this out on a closing basis. You can see we're resetting our momentum indicators, our MACD and our RSI here. But again, very low volume on Friday, and that's going to be expected, guys, going right into the summer months here. Friday's going to be really bad trading anytime after 11:30. So just keep that in mind if you are trading Fridays, okay? But we have this ascending triangle looking okay. But look, guys, we really haven't gone anywhere. Matter of fact, we haven't gone anywhere in pretty much all of 2015. We're up about 3% on the year, and most of that money was made on the first several weeks of January. So we haven't done anything, and you can see here we haven't done anything here, and you can see here as well. So if you go back to late February, going in March, April, and all of May so far, we haven't done anything. Yes, we are making small higher highs and higher lows, which is positive, and we're holding the upper end of the range. So we need to see some conviction now breaking out to the upside and or to the downside. Okay, let's keep an eye on that. IWM Russell looks like a really nice big bear flag. And again, it's going to need to break below this area of 122.84 on a closing basis to make this bearish pattern work out and at least trigger for a retest of the lows and then a 200-day moving average. But again, I don't like this lower high here being formed. So we need to keep an eye on the Russell 2000. It is our secondary leader, guys. So anything can go here. Anything goes, to be quite honest with you. We've been stagnated here in this marketplace, and something is brewing now. And again, you look at the intermarket divergence, you look at the Russell, you look at the transports, which I have in front of you. You're looking at some weakness. Markets aren't going anywhere. We have very bad economic data. Probably going to revise GDP lower for the first quarter. And what happens? The markets continue to rally because now they're saying that, hey, the Fed's not going to move in June. They'll probably move sometime in December. Well, let's see if that happens. And if that does happen, that's great, but again, that's what the markets are anticipating, which is terrible. I think it's just too easy to just continue to go long here. However, that's what the Fed wants, and that's what's happening. So we can't fight the Fed. We just got to go with our patterns. This is definitely a stock picker's market. I can tell you that right now. No question about it. Trading the indices can be a little difficult. And if you are trading it, I take the profits as tighten up stops as quickly as possible. All right, transports, again, making lower lows and lower highs. I don't like this at all. We're underneath the 200 again for several days now. If we start to roll over and deteriorate again and take out this little area of support, then I think that we are going much lower. And watch these thin zone. You can see here. This could easily flush all the way down to here. I know it sounds crazy, but it can when you don't have any real true support areas, to the downside. So this needs to be watched closely. It got a little bit of help from UPS. So UPS had gotten upgraded by a couple of the tier 1 firms, so that pushed the transports higher and kind of let put a bottom, or at least put a bid into the U.S. indices on Friday. But pretty much everything did not go anywhere on Friday up until the last couple of minutes of the day. So really kind of a quiet day. Diamonds here, the Dow Jones ETF, you can see here inside day, did break out of this apex of this symmetrical triangle. That's pretty good. But again, we need a little bit more conviction here to the upside, taking this out. Now again, we're down a little bit, soft in the pre-market. Really nothing to write home about. So pretty much anything can go. We are looking for possible holiday reversals. We all know that coming into a holiday week, whenever the markets are up, they may reverse here. So just keep that in mind. And we have a full week of trading, so this could happen Thursday and Friday, where the markets start to sell off, and maybe we get a little bit of push to the upside the next couple of days. So just keep an eye on that reversal pattern from being long now. Market participants may want to sell some going into the holiday weekend. Okay. Lastly is the Qs. You can see, guys, again, a lower high now being formed from this previous high, still holding up much better. But if we can get the technology to move higher along the banks and financials, and then a little stabilization from the transports, then I think you got something here. Then I think we start making new highs again. But that's not going to be determined until the market tells us. Let's keep that in mind. Have a great day, buddy, and we'll talk to you tomorrow. Take care.